Welcome, beautiful traders, in this wonderful video. I welcome you. So today we are just going to be speaking about market cycling. Market cycling. Sorry about that. Yeah, my market cyclist. I don't know why I'm saying my, but it's market cyclist. So I hope some of you guys have heard of that term somewhere else and other different names, but I'm just going to be breaking down simple concepts that you need to understand so that you can be profitable in your trading, because that's the goal of this lesson, so that you can add something in your account. So simply, market cyclists, it is just the way the market behave or the way the market moves. So we have four different kinds of market move which repeats itself now and then. So I'm just gonna highlight this part here. So we have the first part here, which is called accumulation, So basically what happens here, it is actually where everything begins, or where the major behavior begins, whereby the market was dropping before, but now it has entered in a form of a range kind of a movement. So that's where we see now those buyers who lost hope from the downward move, or those buyers who were defeated from the downward move, now coming back, meaning they are now putting orders. Their orders are now getting in the market, the buyers. That's why in that phase, that's where you see the market now forming new highs, or the market no longer forming lower highs and lower lows. So basically it's just like a range after a sudden fall, or after a very, very big fall of the market. So that's where the buyers are preparing to push the market up. Remember what I always speak about, that whenever you see in transition, whenever you see deal taking place, you need to know that a major move is about to come back. So that's the accumulation phase, whereby buyers' orders are growing in the market, and all of a sudden the market then enters in the other phase that we are going to speak about. So basically, I'm just going to break down how to see and how to go about trading that phase. So it's simple, guys. All of a sudden, when you see the market behavior before, when you see the market behavior all of a sudden changing from a different mode, or to a different kind of structure, that's where you need to understand that it might be another phase coming in the market. For an example, let's say you can see that the market here was falling heavily. It was a very, very strong trend, and all of a sudden it begins to struggle here. So basically this struggle alone, without this entire picture, but just this struggle alone here, it should tell you something, because we didn't see some kind of a huge corrective before. The only corrective we had, it is this small corrective, other small corrective, but such a thing we haven't seen it before. But when you see something like this, forget about seeing the price in the bigger picture, that no, it's a down move. No, focus on what is happening currently. That okay, now I can see something different is coming in. Whenever you see something different, it should call your attention, because that's where even the major direction is going to change. That's where difference will come in a major direction if you see just a small difference. So a small difference leads to a huge difference. We just pay attention to the detail. So when you see something like this, you need to know that okay, now if I was selling, I have to wait. I have to place my trade aside and say, okay, now I'm not doing anything. Why? Because I've seen that the flow has been disturbed. So if the flow has been disturbed, it means that it might be a shift from one kind of a move to another kind of a move, which in this case, I'm talking about accumulation. So once you have seen that, then you have to prepare to do another form of trading. It's either you become a range trader at that particular moment, or you wait for market activation, whereby you are going to trade a breakout of this accumulation phase. I hope that is clear. So then it comes to the next phase, which is the markup phase, whereby now the market sentiment is shifting from being neutral into being positive. It is now shifting from being neutral into being positive. Here it was a negative market sentiment and it shifted into a neutral market sentiment here in this phase here. But now it is whereby you begin to see sentiment shifting somewhere around here, and you will know that okay, now it can happen that okay, the buyers are in, even looking at the structure. When this structure is now violated or broken, that's where a market begins, that's where a new move begins. But now the problem about traders is that that's where they miss most of the money in this phase that I'm talking about. The markup phase, whereby the market takes the upward direction, or whereby the market moves long. In this kind of move, that's where they lose money, because the only thing that draws their attention, it is something that is already clear, which is a bad thing. We can say it's a good thing to see to trade a clear trend, but it is not a healthy thing, because when something is clearly obvious, you need to know that it's about to end. For an example, you can see currently here, now everyone can see that now the market is making higher highs and higher lows. So everybody can see that, okay, now this is an uptrend. So that's where people are jumping in now. That's where they are buying. They even forget to look before that. Now I am in a seller's territory. They forget about that because they always see the move late. So that's where danger take place in the markup phase. So it's whereby it's now clear that it's buyer's market. It's whereby there is clear higher highs and higher lows. So that's where you need to understand the concept of trend trading. Trend trading is not just following the trend, but it is actually having the ability to see the trend while it is still beginning. Having that ability to see the trend while it is still at its early stage. That's trend trading. Being able to spot the trend while it is still beginning. That's your role. If you are going to make money in this phase of the market, then you have to be able to spot a trend while it is still starting. And then with the next phase, which is the distribution. So what happens here, it is just basically an opposite of the accumulation, but now it is whereby we are looking for sellers to come in the market. It is whereby there are now too much buyers in the market. It is whereby there are now too much buyers, meaning when the market is now overbought. In other words, not just in a word in the language of oscillators, but in the language of the market. When the market is overbought, meaning there are now too much buyers and there are no sellers at all, or there is no one whom they will buy from, then that's where we will see sellers now coming in the market. But they will not just jump in with some sort of a V shape. No, they will jump in with a manner of distribution, whereby we will see the dealership taking place. For an example, we have seen something which alerted us here. This deep corrective wave here, it is an alert, because in this wave we had a very, very long impulsive wave without such a corrective, and when this corrective took place, that's when now our eyes were fixed in this next impulsive, that we are waiting for this impulsive to be equal or bigger than this one, which is the previous one. So however, this one, it ended here, and then market begin to move sideways here. Then it was clear to us as traders that now the buyers are getting exhausted. Why? Because their wave or their impulsive wave is smaller than the previous one. So it means that they are now getting weak. So when we see this range here, we know that this is the distribution phase, whereby sellers are preparing to enter the market, or whereby buyers are handing over the price to the sellers. And that's where we wait for a break of this move here, a break of this range here, and then we enter towards the downward move. And then the last phase of the market, it is the markdown. It is an opposite of the markup or an opposite of this upward move here. It is just simply the markdown, whereby now it is clearly sellers' market, where sellers are now dominating the market, whereby it's forming lower highs and lower lows. And then the cycle will repeat itself. It will be again accumulation, and then again markup, and then same thing applies. It will be distribution and then markdown. So the process or the cycle, that's why it's called market cycle, it just repeat itself. That's how the market behaves. So once you are able to understand that the cycle, that okay, now it's distribution, I need to be trading ranges or waiting for the sellers to come in. Now it's accumulation, I have to trade a range or wait for the buyers to come in. Then you are going to be able to be ahead of the market. So that's it for today. Thank you guys for watching.